Today, gold may have just taken a decisive step towards becoming collateral. Hong Kong and the Shanghai Gold Exchange are building a cross-border clearing corridor that could transform gold into a true balance sheet liquidity instrument. It is about rewriting the plumbing of global finance, and it may explain, at least in part, last night's price action. Second, Michael Oliver. Gold opened last night at 46.55, silver near 93, and the message from Michael Oliver in his weekly report was blunt. Do not confuse volatility with weakness. Miners are breaking decade-long bases. Silver is still historically restrained versus gold, and weekly pullbacks are being framed as buy signals by him, not reversals. This is not a late cycle melt.
Vince Lanci says that gold is evolving into true financial collateral as Hong Kong and the Shanghai Gold Exchange build a cross-border clearing system, marking a structural shift into a new market regime. Citing Michael Oliver and MSA, he warns not to confuse volatility with weakness, as miners break decade-long bases and silver remains undervalued versus gold. With stocks, bonds, and the dollar weakening, while gold nears $4,670 and silver tops $93, stress is building beneath the surface. The wide Shanghai-New York silver spread suggests the rally isn't finished, and prices should converge higher if Chinese demand continues to lead. If this insight helped you, like the video, subscribe to the channel, and share your view in the comments on where gold and silver go next.
10-year yields are closed. The bond market is closed, 422.7. Dollars down 22. The S&P 500 is trading, although the market's not really open. Down 70. The NASDAQ is down 134. The VIX is 1890, up 3. Well, that's Friday. Gold is up 74 at 46.69. Silver is 93.14, up $3.70. That's 1.62% and 3.44%. I'm going to give you the comparison to China now. Shanghai last traded $99. When the market opened last night, the Shanghai US spread was about $10 to $11, which is a sign of a market that needs to rally more. As the market rallies more, this spread should start to consolidate. They should converge in price as the market goes up. And indeed, at least on my screen here, silver is actually down $1 in Shanghai, while it is up $3 in New York. So you can assume that as this ebbs and flows, it should converge higher if Chinese prices being projected onto the world. If it converges lower, then China demand is being satisfied.
Vince Lanci frames the market as a race between U.S. and Chinese pricing, with convergence signaling the next leg of the rally. While Bitcoin lags and broader assets move unevenly, precious metals are leading, with gold surging toward 4,655 and silver holding near 92.7. According to Michael Oliver's MSA, this move is structural, not speculative. Miners are breaking out of decade-long suppression, and silver's volatility reflects acceleration, not exhaustion. Leadership from silver miners and improving platinum ratios suggest a sector-wide re-rating that is still early in its cycle. Let's listen to Vince.
The price is 100, and let's see how fast the U.S. price can get there. Or will the Chinese price come down to meet the U.S. price? And the twain shall meet. Okay, moving on. Copper up 25 basis points. WTI down 25. Natural gas up 39 cents. 355. Up 39 cents. 12.48%. I have to look at that. That might be a rollover. But it's also probably weather related. There's going to be some weather coming soon. Maybe Europe. Bitcoin down 500. Bitcoin is definitely gold 2.0 now. Can't get out of its own way when everything else is rallying. Disappointing. Ethereum 32.25. Palladium up 7. platinum up 28, gold, silver down a point, 50, half of what it was 6 months ago. Soybeans up 37 basis points, corn up 1.1%, and wheat up over 1% as well. Okay, let's get to what we're here for. Gold surged towards 46.55 last night, while silver held 92.70 as metals extended a structurally driven advance. Michael Oliver's MSA framework argues that mining equities are emerging from decade-long suppression. Silver remains historically restrained versus gold, and weekly volatility reflects acceleration rather than exhaustion. Relative breakouts in XAU versus the S&P, leadership from silver miners, and improving platinum ratios point to a sector-wide re-rating and remains early in its cycle.
Gold opened strong near $4,655, with silver around $92.70, as momentum in metals continues to build. Vince Lanci highlights the Hong Kong-Shanghai Gold Exchange Agreement as a major breakthrough, creating a cross-border clearing corridor that allows gold to function as repo-eligible institutional collateral, not just a reserve asset. This shift makes gold a monetizable, leverable liquidity asset within an emerging multipolar financial system, accelerating its role in global finance. He also notes institutional focus on the gold-silver relationship, with silver's strong run reflecting relative value rather than excess.
That's in MSA update. Gold opens 46.55, silver at 92.70. Next, another point of pride. HKSGE Hong Kong Shanghai deal advances gold's collateral repo path. Hong Kong and the Shanghai Gold Exchange will launch a cross-border clearing system, creating a central infrastructure for custody recognition, delivery certainty, and settlement efficiency. Officials frame the move as market development, but its strategic impact is much deeper. Interoperable vaults, which we identified in May, and clearing corridors, which we kind of labeled it a gold corridor, allowing gold to function as institutional collateral, not merely a reserve asset. So it's not just a reserve asset as an off lane to save your money for the BRICS. It's going to be a monetizable, leverageable asset for growing economies. The agreement directly supports gold's evolution into repo-eligible liquidity within emerging multipolar financial architecture. Hat tip to Eric Young, brother from a different mother. This is about repo and HQLA, and it just makes it inevitable. News and analysis. Founder special, gold bull is anti-bubble. We mentioned that already. Goldman, how to implicitly handle silver gains. This is an institutional recommendation to their clients, essentially talking about get long the gold silver ratio, not short silver, not long gold, get long the gold silver ratio. And I don't care if they're wrong today, it doesn't matter. The point is silver has run relative to gold, and on a relative value basis, if you're long silver and you're nervous.
Lanci says if silver's rapid rise makes investors nervous, they shouldn't panic sell, but consider rotating into gold, or even better, deeply undervalued silver miners. At nearly $93 silver, miners are still priced as if silver were a fraction of that, creating a major disconnect. He notes that major institutions are reinforcing the gold bull case and highlights prominent Hong Kong investors who are accumulating physical gold and refusing to sell amid historic changes in the global financial system.
How much more can it go up? And you have a lot of money on the table, but you don't want to get out. Maybe consider rolling your silver into gold. Maybe consider rolling your silver into silver miners, because let's face it, silver's trading $93. Miners are pricing silver at like, what, 37 bucks? I have no idea, but it's ridiculously low. We'll be doing that as well. B of A declares new gold bull. We say new gold bull because they've been bullish for a while. Michael Hartnett is, however, giving a new reason to own gold, and maybe he has had a little bit of an effect on the market. Silver through the HSBC lens, Founders First Look, and GoldFix PM audio recap. We want to mention again, Eric, he says famous Hong Kong hedge fund manager and investor Chia Cheng Hai, I'm not sure how to say it, tells the public that he only buys physical gold, but he doesn't sell it during the current historic changes to the global financial system.
If this insight helped you, like the video, subscribe to the channel, and share your view in the comments on where gold and silver go next.